I'm Joe Gallimore, Director of Investment Research with Argent Bridge Advisors. Before we jump into this month's Cup of Joe, I just wanted to share that we will be having a State of the Markets webcast on Thursday, March 27th. That'll be at 11 a.m. We will be joined by a guest commentator from JP Morgan, and he and I will be walking through 5 questions that are probably on the top of everyone's mind right now. So look for details on how to attend. We will be sending out those details by email in the coming days. Now for this month's Cup of Joe. Well, there's a lot going on right now in both the headlines and the stock market. So that's what we want to address this month. Yes, US stock indexes, they are experiencing some considerable volatility at the moment. It is being driven by the uncertainty created by the policy shakeups coming out of Washington, and primarily the tariffs, as you may have guessed. Now, the US markets did start the year at already expensive levels. And as we've shared with a lot of you, price declines of 5 to 10%, those are common occurrences in the stock market. So the volatility itself wasn't completely unexpected, as you've heard us talk about here on Cup of Joe. But the uncertainty that's been created by all this tariff jousting, that is undoubtedly what is stirring up this volatility. And frankly, the market, that it may want to see a lot of that uncertainty diminish before the market switches back into growth mode. So that is what we are keeping an eye on. Now, as we always say, our advice is to stay the course, stay invested, and stick to your plan, right? But staying the course does not mean just ignoring what's going on around you. We acknowledge that the changes happening in government right now, those may have meaningful effects on the economy and could potentially trickle down to portfolios. So we are paying very close attention to what's happening. We are leaning on the insights of many trusted investment partners, and we're having lots of discussions among our team about what's going on and how to stay on top of it. In fact, just this week, our investment committee met to discuss if any potential investment strategy changes are opportunities right now. So let's jump into portfolios. In your portfolios right now, with all this market volatility, diversification is working exactly as it's meant to. While US stocks are working through a price reset, the international stocks, the real assets, the bond strategies in your accounts, those are buoying your accounts right now. They're just like a generator kicking in when the power has gone out. This is the way you want differing asset classes to behave. When one goes down, the others complement it. And finally, with all this volatility right now, it's also a pretty good time to highlight another lesson in diversification. And here I'm talking about the Mag 7. You know, those 7 darling super growth stocks that everyone's heard so much about in the last 2 years because they've completely dominated performance. Well, now that US markets are under pressure, so far in 2025, 6 of those magnificent 7 stocks are negative. And all 6 of those are down by at least 9% or more. Meta is the only one that's positive so far this year. And speaking about NVIDIA specifically, if you were lured in by the NVIDIA frenzy back in 2024, I hope you haven't gotten bit too badly, because if you bought NVIDIA anytime in the last 6 months, your holding is probably at a loss. You have to go back to September 6th to have a positive return in that stock right now. Now, don't get me wrong, the Mag 7, these are all great companies to own. This is a lesson in FOMO investing and, above all, not to pile too much into any one stock because they become frenzies and your emotions get the best of you. Just remember that no stock is untouchable. NVIDIA was the darling stock of 2024 and it's still a great company. It made $19 billion last quarter, but it was priced for perfection. Frenzies create price traps like that. Darling stocks, they come and go, because before NVIDIA, it was Facebook, which is now Meta. Before that, it was Apple. A while before that, it was ExxonMobil, and even further back, it was IBM. These were all stocks that were thought to be able to grow to the sky, but the prices got out ahead of the businesses. So lesson learned, do not put all your eggs in one basket. It's an adage that keeps coming up and remaining true time after time. Focus on the long term, stay diversified, and stay invested. That does it for this month's Cup of Joe. If you have any questions about anything we've talked about, please reach out to anyone at Argent Bridge. Be sure to like our YouTube channel and subscribe to our YouTube channel and like our video. Thank you.